Season's greetings from CPA Life. Today, we look back on John Randolph's conversation with legend of the profession, Ron Baker of VeraSage. With topics ranging from value pricing to client advisory services to the moral injury many accountants face in their current jobs, this is an end-of-year episode you don't want to miss. Welcome to CPA Life Rewind.
Hey everyone, welcome to another episode of the CPA Life podcast, the show that focuses a spotlight on some of today's key voices in the public accounting industry, folks that are laser focused on building a more modern-minded, future-focused firm. And today, we are going to spend some time digging into a couple of those areas that seem to be hot buttons for firm owners and leaders, topics of value pricing, subscription-based pricing, and the wonderful CAS or client advisory services with a longtime influencer and a guy that knows quite a bit about those topics, Mr. Ron Baker. Ron, thanks for joining us.
No, thanks for having me, John. Looking forward to it.
You know, stereotypically, Ron, we spend the first few minutes of our show talking with guests about how they got to this point in their career journey. And you had a fairly traditional start coming out of college and working for a Big Four firm that was it Big Eight at that time?
Big Eight, yeah. That's how you carbon date a CPA. Did they say Big Four, 6, 5, 8? So you can put me in the right era. I'm a Big Eight guy. In fact, I'm Pete Marwick Mitchell. It's even worse. So
I was going to ask you, which firm did you work for? Because I know that it was KPMG, but I was going to ask you what the legacy firm was.
Yeah, I left right before they merged with Main Herdman.
Yep.
Which is where I guess they got the G in there or something, Anyway.
Something in there. So walk us through the history and a little information about the two roles that you've had the last couple of decades as the owner and founder of VeraSage and the radio host of Voice of America Radio.
Real quick, I actually knew I wanted to become a CPA when I was in high school and had a really good accounting teacher. He was fantastic. He had a 2-year program, not a 1-year, but a 2-year. He also taught us taxes. So we ran a tax clinic in the school. Kids would come in with their W-2s. I'd fill out their return. They'd slip me a 20, because they're getting a refund and they were all excited. I interned for a CPA when I was in high school. I was his TA in the 3rd year. And he just inspired me. He'd bring in CPAs to the class to talk from industry. We had an FBI guy come in, and he had a major impact on me. And I ran my own accounting firm in high school. My dad was a barber. I did his books. I did a bunch of his friends' books. I defended them in front of the IRS. Actually went in with a signed power of attorney. I'm not even 18 years old. They let me do it. So I was billing time. I was filling out a timesheet as a high school kid, because that's what all the CPAs taught me. I joined the Big Eight after I graduated. When I left the Big Eight after 2.5 years, I started my own practice. And that's when I learned really, really fast that the billable hour was kind of a crappy customer experience. I got tired of people coming in or calling me, "Why didn't you tell me it cost so much?" And the only answer I had, John, was, "I spent the time. Look at my timesheet. I spent the time." And the customers don't care about the time, right?
Nope.
And they care about the result, the end product. I just walked into my partner one day and I said, and this was 1989, by the way. I said, "Justin, we got to go to fixed prices."
Wow.
"We can't do that. We don't know how long something's going to take." I said, "No, don't give me that." I said, "Mechanics do it. Everybody gives us a fixed price. We can do the same thing." And we just started doing it because I was studying companies that back then were called TQS leaders, which was total quality service. Now we would call it customer experience. And it was companies like Nordstrom and Disney and Lexus and FedEx, all these companies that I truly admired. And I said, I want to be like them. And we did it. The customers loved the certainty. We made every mistake under the sun. We didn't do a lot of things that I've learned since and teach, about offering 3 options, about having a value guarantee, all these different economic and marketing things. We didn't do any of that when we first started, but the customers loved it. So we stuck with it. And it also allowed us, well, guess what? If you're not selling time, no need to measure it. So we got rid of timesheets. This is all in 1989. There's nobody on the circuit talking about it. There's no books about it, at least not in the professional space. And we stuck with it because the customers loved it. The feedback we got from the customers was amazing. And we just kept getting better and better and better. It allowed us to raise our prices. It allowed us to get rid of a lot of low value customers. And then I got so excited, I started teaching it to the Cal CPA Society Foundation. And then in 98, I wrote a book. That book was kind of picked up by Paul Dunn and Rick Payne out of Australia, waved around the world on various stages. It sold 40,000 copies, which was kind of interesting. It was a $150 book. And that's what got me out of my practice and into starting VeraSage and consulting and writing and speaking, which is what I do still today.
So was that kind of the impetus that you kind of said, hey, this is something that needs to be said
Oh, yeah.
as loud as possible to as many people that will listen?
Yep. And I screamed it. I was very cantankerous when I started doing this because the arguments I had with people were amazing. And I just wouldn't back down. I love to debate and I love to go after people and I love to try and change their thinking. I've since mellowed in my old age, but yeah, I really hit the scene with a bold vision that we shouldn't be doing this as a profession. We're professionals, for crying out loud. That means we stand for things, we profess things.
Mm-hmm.
And I don't want to be known as the guy who did his timesheet on time. That's not how I measured. It's not predictive of the success of a CPA. It has nothing to do with what I do or how I add value. It's not a good measuring rod. It's like plunging a ruler into the oven to determine its temperature. It's just the wrong measuring stick.
Yep. So one of the things that we'll constantly hear from clients when they're still in a hourly billable model, or even a model that maybe they're doing some subscription-based pricing or value-based pricing, but that timesheet is still in the picture.
Right.
So in some way, shape, form, or fashion, that timesheet is either the barometer of what we bill by, or it's a piece of our business.
Yep.
One of the things we hear from them is we've got to be able to measure. If we don't have that, we can't measure. We can't measure productivity. We can't measure profitability. We can't measure, we can't measure.
Yep.
What do you say to that firm leader, to that firm owner that makes that argument?
Well, obviously, we can measure without the timesheet. We do it anyway. We have an income statement. We have cash flow we can look at. We can do capacity planning. We can do proper project management by forecasting time into the future, like real project managers do. Project managers don't lay awake wondering why they spent, 100 hours over budget. They lay awake trying to figure out, am I going to get my stuff done by the deadline that we promised the customer? This is why FedEx measures on-time delivery, right? What you care about from your UPS driver today is they drop your wine shipment by the time that they specified.
Yep.
I mean, Domino's Pizza does this, right? It shows you a pizza tracker. We're going to get there in a half hour or whatever. We can measure all sorts of things that aren't time related. We should be measuring things that the customer cares about. How does the customer define the success of their CPA? Do they keep their promises? Do they call me back or respond to my emails in a timely manner? All of these things are much better things to measure than what somebody lies on a timesheet.
Yep. And ultimately, that really is what's happening is, somebody is spreading out that time on a timesheet somewhere in the firm.
Absolutely. Borrowing from other jobs or fudging or whatever. I mean, they're a pack of lies. They're not accurate. But even besides all those arguments, they're not the right thing to measure because somebody can create $1 million in value with a brilliant idea. What do I put on my timesheet? Do I count the time I took a shower this morning and all? I mean, it just gets ludicrous because it's the wrong measuring stick for value, especially in the knowledge environment.
Absolutely. One of the things I've heard you talk about a few times in the subscription pricing mindset is the medical world shift from the concierge and primary care pricing model. Talk a little bit about that because I think it's a great comparison.
Yeah, I do too. This was the North Star for the book Time's Up. My North Star for where CPA should be is what the concierge doctors are doing and what the direct primary care doctors are doing. Now, they're peas in a pod in the sense that they tend both to be general physicians. The difference between a concierge doc is just, it's the price point. One's Ritz-Carlton and the other is a Marriott Courtyard. The DPC docs are they're going after the middle class, and the lower middle classes are usually between $100 and $300 a month. So let's just focus on the DPC docs. A DPC doc is a GP who The average GP in the United States has a panel of patients of about 2,400. That's why you get to spend 5 minutes with your doctor.
Yep.
Because he has to see or she has to see 50 or 60 patients a day, and they're running, from one room to the other. And they only get paid because they take insurance, whether it's Medicare or private insurance. They only get paid when they do something to you. They're in a fee-for-service treadmill. They don't get paid for consultations. They don't get paid for FaceTiming or texting you or emailing you. That's why they always tell you to come in, because they're only going to get paid when there's a consultation. Even after COVID, before COVID, didn't matter. So they have 2,400 patients. Now, DPC doc will limit themselves to somewhere between 500 and 600. So they're running at 25% capacity.
Wow.
But you can spend the average appointment time with a DPC doctor is over an hour. And their whole mindset is, yes, they're going to cure you when you come in with a presenting problem. They'll fix it. But their real goal is to keep you healthy.
Which is a complete opposite mindset from traditional
Totally.
medical world.
Absolutely.
We can probably run down this rabbit trail for a while, but I remember listening to an audiobook my wife and I were listening to on a drive, and it was a doctor that left the profession and is now focused more on holistic medicine. And his comment was, I left the profession because the profession has one goal in mind: keep you alive as long as possible.
Right.
Period.
Right.
It's not about prevention. It's not about getting you well unless you have his words, a direct primary care physician who is going to spend his time helping you not just get better, but stay better.
Right. Yeah. And that's exactly where we need to go. My favorite definition of what it means to be a professional comes from Michael Hammer. And he said a professional is someone who is responsible for achieving a result rather than performing a task. If we want a task done, I'll hire a day laborer, clean my gutters, walk my dog, right? But if I go to a professional, an eye doctor, a CPA, a lawyer, I'm looking to achieve a result. And that professional is responsible for achieving that result, not performing the task. And my argument against the billable hour is it atomizes everything into a 6-minute task.
Yep.
And then we think, well, we did these 22 tasks, so we're done with this job or we're done with this client. It's like, no, what about the result? You can do all the tasks on the checklist or whatever, but you may not achieve the result that the client was seeking. You probably didn't even know the client had a result in mind unless you had a conversation with them. And so I actually think the billable hour is unprofessional because it takes our eye off the result.
Mm-hmm.
And the result is either to be healthier, wealthier, or wiser. And that's why the professions that do that make people healthier, wealthier, and wiser, are so well poised to do the subscription model and do what the DPC docs are doing.
It's amazing to me how many younger people, regardless of industry, get that. As I mentioned, we just recently moved into a new house. I talked to a concrete guy the other day about pouring a slab for a metal building I need to build. Young kid, 24 years old. He's the only guy that I talked to that did not say something to the effect, well, it's going to take me X amount of hours, so my hourly rate is X and my product's cost is Y, so it's going to cost you about A to B for me to build this. This kid came in, looked at it. First of all, he's also the only one that came to my house to look at it. Everybody else did it over the phone or an email. This kid comes up, 24 years old, looks around, takes a couple of measurements, figures on his phone a couple of things, looks at me and says $8,000. And I said, okay, how did you come up with that? Well, I looked at it and I figured it's going to take us about this long to get it done. But I mean, I can give you an hourly rate, or you can just know that whether it takes me 1 day or 5 days, it's going to be $8,000.
Right.
Okay.
And see, this is the great distinction that project management makes between estimated effort versus duration. What the customer cares about is the duration. When can I walk into it? When can I start using it?
Yes.
And that's what project managers are worried about. If all you're doing is looking at a timesheet to figure out your workflow, it's like timing your cookies with your smoke alarm. But I mean, by the time you see something on the timesheet, it's by definition no longer manageable.
Yeah.
It's a sunk cost at that point. And that's not what the customer cares about. They care about, when can I use the building? When's it go live? And we don't measure that. We measure the effort. not the duration. It's crazy.
That's a great distinction because, again, in this scenario with the concrete guy, my biggest concern is I need to know when you're going to be done because I need to schedule some guys that are going to build a metal building workshop for me. So all I really care about, I don't care if it takes you 2 days or 5 days or 2 hours to get it done. When will it be done? And when can I get these guys standing on the concrete building this? Like you said, that's what matters to me, the end result.
Right. And John, it's funny because, I've hired guys too to do stuff around my house. And the other thing that I find amazing about the home improvement or whatever business, handyman, contractor, none of them give you options.
Mm-hmm.
If that guy would have given you 3 different options for 3 different types of building, where you can have this material, or we could do it this way, and this might last longer, or be more weatherproof, or more soundproof, whatever it is you're looking for. I mean, if he would have given you options, my guess is you wouldn't have bought the cheapest.
Mm-hmm. You're absolutely right.
And none of them do that because they're so T&M driven.
When you look at the space that we're in now in 2024, I've got to believe that there's a few more smiles on your faces coming away from conversations or lectures or discussions or training, coaching type events that you're a part of because there's more people that are getting it.
Yep.
When you think about those people that are getting it, do you see some common themes between firms, organizations, size, mindset? Is there anything that you look at and see a string of commonality?
Right. It's a great question. And I think about this a lot. There are certain characteristics of firms, or it's really not firms, it's the people in the firm. We don't convert firms, we convert minds inside of firms.
Yep.
And sometimes you can't convert a firm, but you can convert a mind in a firm. And if that person leaves the firm, then they go out and start their own firm and do it the right way. Right. So I've always counted conversion of minds, not firms. But the pattern of people that get value pricing, first, they have an abundance mentality. They don't view the world as zero sum. Some have to lose for others to win. They don't have that mentality. They know they're professionals. They know they bring tremendous value. And so that's a common characteristic. It's not age related. I have learned some of the biggest movers of this were older. And the whole thing about, you can't teach an old dog a new trick. You can. Now, maybe an old dog is not going to invent a new trick. Innovation tends to be a very young person's game, below 40 on average. And we could spend a lot of time on that. And that really pisses people off when I say that. But it's so true that if you look at all the Nobel Prizes, if you look at the average age of the Manhattan Project scientists, 25. Look at the average age of the founders of this country, all below 30, except Ben Franklin. He's an outlier. I'll give him that. Franklin did amazing things into his 80s and invented all sorts of new things. But he's almost like the exception that proves the rule,
right? Because
he's so unusual. And so that's another thing. The other thing is they realize that there's a better way to run a practice than billing time and filling out timesheets. And a lot of them just did it because they were fed up. Or they had a medical crisis that they had to change. They had to work smarter, not harder, because their doctor told them that. Otherwise, you're not going to be here, type of thing. I wish I could point to various things, but it's just mentality. It's always been a mindset issue. There's a great video on this, by the way, and you might want to dump this in the show notes, called The Backwards Bicycle. If you just Google The Backwards Bicycle, this video will come up. It's about 7 minutes, and it is the definite, perfect explanation of how hard it is to rewire your mind from hourly to a value pricing mindset. And it does a great job explaining how our brains work.
Interesting. You talk about how that person that gets a new idea leaves and starts their own firm. We've got a client here in the Dallas area that we work with that left a big four firm with the intent of a lot of long nights, single guy at the time, a lot of time at 11 o'clock midnight at a bar having a beer with buddies, all kind of saying the same thing, there's got to be a better way. He left to start his better way. And what was funny is he said he kind of woke up 2 to 3 years into starting his own firm and realized all he had done was build a smaller firm that looked like what he left. All the ideas he had got put on a back burner because I got to make money. And so I just started doing it the way I knew how to do it. And we're working with clients that are a pain in the butt. We're billing by the hour. I'm killing myself. My staff is overworked. We're over capacity. All of the things that are traditional within a firm. And kudos to him. He recognized that, drew a line in the sand, and sat down with his team and said, okay, here's what we're going to do going into next year, which was going into 23, coming out of 22. No more orphan tax clients.
Yep.
If we've got a client that all we do is their tax return period, the end, a simple 1040, whatever it is, they're gone. 23 is the last year we're touching them. We're not going to do it. Everybody's moving to subscription-based pricing. If we do your taxes, we do your bookkeeping. If we don't do your bookkeeping, we don't do your taxes. So we're going to touch your books at least quarterly, ideally monthly. Over the course of 23, they got rid of about 38% of their client base, hired, I think, 3 people, grew revenue by 65%.
Yep. I wrote the same chapter. I mean, I was, psychologists call it path dependent.
Mm-hmm.
You know, what you are in the past, you'll be in the future. And I came out of a big 8. And what did I do when I started my firm? I billed by the hour. What did my partner agree with? Well, he was from AA. So we got to keep a timesheet. We bill by the hour. And it's crazy. And I recognized it really fast that this isn't the way to success. The other thing that needs to be said, I'm getting tired of hearing the fact that CPAs are burnt out. We're suffering from burnout,
Mm-hmm.
depression, alcoholism, divorce, suicide, all of these things. You hear this in the medical field too. And this is where I learned all this, by the way. It's not burnout, John. I mean, CPAs, type A personalities. They went to school, they worked really hard, top of their class, academic achievement, all of that. It's not burnout. I think it's moral injury. We're not living our purpose. When a doctor takes the oath, the Hippocratic Oath, there's something in one version of it from John Hopkins that says, if I shall fail to live by this oath, may my own health be taken away from me. In other words, if I betray these words, and there's a great book out there called If I Betray These Words that talks about we're misdiagnosing. It's not burnout. It's moral injury. We're not doing what we're designed to do. If you ask any CPA around the world, why'd you become a CPA? They'll say to help people.
Yep.
And are you living that purpose? No, because I'm filling out a timesheet in 6-minute increments, and all I'm judged on is how many hours I bill and what tasks I accomplish and whether I do it on time or not. My impact on my customers is not being measured at all or even looked at or considered. That's moral injury.
Yep.
It has nothing to do with burnout. If I were to go through your new house and change all your light bulbs, screw in new individual light bulbs, and 50% of them popped out, blew up, I probably couldn't blame the light bulb. I'd blame the electrical system. And the electrical system in our case is our business model that we sell time or fee for service. And it's dispiriting.
Yep.
It's moral injury. That's what we're suffering from, not burnout.
As a firm, we track a lot of stuff. Individually, I track probably more than we do as a firm because the ability to go back and look at the tape, so to speak,
Yep.
I think is critical. So one of the things that we did about 2 or 3 years ago was we just started tracking. Because again, the only space that we play in on the recruiting side of our business is public accounting. So all day long, we're speaking to public accounting people. That's all we do. So we started tracking. I asked my team for 3 months, we're going to track this. Where in the conversation does I hate what I do, get me out of public accounting come into the conversation? Where does it come in and how often does it come in? 83% of the time, that's the conversation within the first 10 minutes.
Wow.
Now, we don't tell people, hey, this is all we do. But through the course of conversation, it'll come out either, hey, if I make a move, I'm not staying in public accounting. Or I'm looking to make a move, get me out of public accounting. And the conversation at that point we start to have is, tell me why. Tell me what you don't like. Tell me what drives you up a wall. Tell me what pulls your hair out that makes you dread going into work right now. Tracking time, timesheets, work-life balance. Everything is focused on getting the work out the door. Bill, bill, bill. That's the frustration. And usually we're speaking to people that have anywhere from 1 to 20 years in the industry. And we'll flip the question a little bit after talking about the pain and say, okay, you've been there for 2 years, 4 years, 8 years, whatever it may be. You've been in the industry. What's kept you there? Obviously, you don't hate everything. Tell me why you stay. And it gets back to what you just said. I love helping people. I love the fact that there's variety in the work. I love the fact that Tuesday doesn't look like Monday and this Tuesday will not look like next Tuesday. Love the fact that I can make an impact on somebody's life if I'm working with a small business that's having some challenges or problems. All of those things. And what we try to get them to realize is, look, what you're telling me is you don't hate what you do. You hate where you do it.
You do it. It's the electrical system.
Yeah. And we'll ask them if we can find a place for you that lets you plug in and takes away 80, 90, 95% of the things that just drive you up a wall, but replaces those things with the things that just give you fuel for your fire, would you at least be open to hearing about opportunity? We're not asking you to interview. We're not even asking you to take a job. Just would you listen? Would you at least listen? And of that 83%, half of those people say, I'll listen because I love what I do. You're right. I don't like where I do it.
It's amazing. Yeah. This is why we joined the profession, work so hard to become a CPA. And then we get in there and it's not like it was sold.
Mm-hmm.
We're not living our purpose. And that's moral injury. I highly recommend the book it's Dr. Wendy Dean, If I Betray These Words. It really, I heard her on a podcast, but I actually talked about burnout with a DPC doc. And I was giving them statistics from some study. And we had him on the show and he said, Ron, I really doubt those studies. He said they're flawed. They're deeply flawed. And that stuck a bug in my ear. It's like, well, wait a minute. I'm looking at this with the wrong lens. And then I landed on this moral injury. And I think it's a much better diagnosis.
I think you're probably onto something there because, again, the conversations, the unscientific conversations we have every single day, they bear that out.
They bear it out. Me too.
They absolutely bear it out, which I think brings us to a great point to segue to another part of the conversation I want to get your thoughts on, because I think it's something that, again, you've touched on a lot, and that's the whole CAS, client accounting, client advisory services. And I want to make the distinction that those are two very different things.
Yes.
And I think that the firms that are getting it right are embracing, yes, there may be accounting in that, bookkeeping, but I think what I've seen from our perspective, the firms that are getting it right are truly embracing an advisory mindset, which then feeds the fuel of excitement for the people that they have working for them. And they're no longer just focused on the transaction, but they're focused on the solution. They're focused on not just reporting or talking about what's happened in the past, but let's look at how we're going to get there in the future. So talk to me about the entire client advisory, client accounting world, what you're seeing. Is it something that still has a long way to go, or have we made more headway there recently than in the past?
Yeah, the shift to advisory has been talked about for a long time. I mean, Paul Dunn, Rick Payne came out of Australia. They used to do the boot camp. That was a big thing in the late 80s and the 90s. And this coincided with AICPA Vision Project, if you remember that.
Mm-hmm.
So as a profession, we've been talking about this for 30 some odd years. This is not a new topic. CAS is not a new thing, for crying out loud. It's a very old thing. And I don't think we've done a good job, because to be an advisor, to be a consultant versus, say, being an accountant, there's a difference. As an accountant, you're an expert. If I ask you a tax question, an audit question, a GAAP question, you're going to give me an answer. And that's part of your self-identity, your self-esteem. Hey, I know this obscure code section or whatever. But a consultant is not paid to provide answers. A consultant is paid to ask a more beautiful question. So I think that's the biggest mindset shift that we have to overcome, as we don't have to have all the answers when we go into consulting. We just have to have more beautiful questions. The customers know the answers. If you ask a beautiful question, it's great because it leads to new thinking, new ideas, new creativity, all of that. But we're caught up in the expertise mode. That's one thing. The other thing I'd say about the CAS thing is I have a very provocative definition of a business model. And that is, in essence, a business model explains where revenue will be earned when services are provided for free. Now, John, stick with me. If you gave away the tax, if you gave away the CAS, gave it away, the service, all the things on your to-do list, paying bills, AP, AR, payroll, it's all free. What would we charge for? What would we monetize?
That's a great question.
Well, my answer is transformations. We are poised to guide our customers from where they are to some desired future state, to where they want to be, from smoker to non-smoker, from overweight to fit, from cash flow worries to a year in the bank cushion or whatever. And we do these transformations every day as CPAs. We already do this. We just don't use the language. We help our customers retire sooner. We help them grow their business, make it more valuable so they can sell it at a higher price. We help their kids get into college, at least financially, maybe not academically.
Right.
We help them plan their legacy for after they're gone. How much is Warren Buffett, Bill Gates, and Mark Zuckerberg, how much time and money do they spend on their legacies? Foundations, estate planning, multi-generational planning. When you guide a transformation, you're touching the customer's soul. And the services become a means to an end. Our value is not in our services. It's not in our scope of work. We have to get away from that. Scope of work is meaningless. The services are meaningless. What matters is guiding those transformations. And we can do it over and over. We can do serial transformations from womb to tomb. We're one of the few professions that can help people become healthier, wealthier, and wiser, to borrow from Ben Franklin. And yet, we don't message like this. We don't market like this. We don't talk like this. And if we did, I claim we'd have 3 or 4 or 5 times the pricing power that we have by being on a fee for service like the doctors are. I'm only getting paid when I sell a pair of hands. That's way too limiting. As a professional, when we don the mantle of a CPA, we're so much more valuable than our scope of work. So much more valuable. It's not about the fee for service. It's not about the transaction. It's about the relationship. With a subscription model, you're building lifetime annuities that are more valuable than the cost to acquire them. So it changes the focus from the math of the moment, the rate per hour, the profit per job, the profit per customer, all that's out the window. And now your big metric is customer lifetime value. And firms that are subscription are selling between 5 and 14 times revenue compared to 1 times revenue if you're in an hourly mode, or maybe 2 or 3 times if you're a value pricing firm, because recurring revenue is far more valuable to the market than reoccurring revenue, which has got one and dones and like a rash. Reoccurring revenue, you never know when it's going to come back, but recurring revenue on a subscription model, that's incredibly valuable.
You know, I think that what you're saying has a lot of legs to it, but I think the challenge is that we get back to is the mindset. And the reason why I say that, Ron, is we were talking a little bit about how we rolled out last year an advisory piece of our business called Talent Plus Advisory. And our focus with that is, we're going to roll in some of your talent acquisition needs. You need to hire 3, 4, 5 people. Yes, we're going to roll that in. But at the end of the day, all we're doing at that point is we are reactively taking care of the problem when it arises.
Right.
We're sitting back and we're waiting for you to get the flu.
Right.
And the minute you say you get the flu, we're going to jump in and we're going to help you get better from the flu. Our desire with this model has been to partner with clients and look, let's figure out. Now, if you're Deloitte and you've got all this internally in your organization, or EY or Grant Thornton or Baker Tilly, great. But if you're a 22-person firm, if you're a 18-person firm, you don't have the resources to do that. So let's sit down and let's figure out, 1, how do we sell you better in the marketplace? Number 2, how do we keep your people longer? How do we engage with them better? How do we brand who you are internally and externally so that it resonates better? How do we tell your story internally and externally? Because the goal through this is to stop the back door from spinning so that the front door doesn't have to come open so much. And we keep people in there engaged with who you are. Now, when we talk to clients about that, man, they get it.
Yep.
They get it. But then we start working with them, and the first thing they want to know is, okay, so when can we start interviewing candidates? If we don't have an opening, or if we're not projecting something or a need until middle of Q2, we're going to build a pipeline. Let's focus on other stuff. Let's talk about how we get you to the desired state of not having to deal with the capacity issues you're having to deal with.
Right.
Let's get you to the desired state of people not leaving your organization voluntary turnover is one thing. Involuntary turnover is another. Let's reduce that voluntary turnover. If we can get it to zero, let's get it to zero. But the mindset constantly goes back to the transaction.
Right. It's a very difficult thing to overcome. I mean, we are so used to the only way we get paid is when we do something to or for the customer. And we've got to change that mindset, because I think the other issue with this is I see a lot of marketing messages, and I'm sure you do too, John, about the problem. CPA firms love to say, we solve your problems. We're your solution to problems. And that's great. We're great problem solvers. We can get the IRS off your back, blah, blah, blah. But if all we're doing for our customers is solving their problems, we're just reverting them back to the status quo. We're not advancing them.
Yep.
I want to advance them. I want to transform them, because when you transform a customer, when you guide, when you get them to that capacity where they have spare capacity, they're not running around with their hair on fire, they have time to take the good customer that comes in and needs that last minute airplane seat, right? The last thing I want to hear from my dentist if I have a toothache is, oh, we can fit you in 3 weeks. No. Not good. You better have capacity today for emergencies. You always have to have spare capacity. And boy, if we could get there, if we could guide transformations, then the services become a means to an end. The customer's the product.
I like that.
The customer's our product.
And I think there's a lot of truth to that. You talk about building in that spare capacity. There's a firm that we've had on the podcast by the name of Audit Club, and they've rolled out a... Oh,
yeah, Vanover, Chris. Yes.
Yeah, Chris Vanover. And I like when Chris and I were talking about their business model, how they're basically a 4-day-a-week business model. And I asked him, I said, what if there is that person that absolutely needs you on Friday? And he said, we're available on Friday. It's going to cost, but we're available. And if you want to pre-purchase that, meaning you don't just want a seat on the plane, you want first class, or you want the option to even upgrade to business class if you want to. There's a cost to that is a part of your package. And I think that there's a lot of sound reasoning behind that, because now you start getting into saving time, not stressing, having that insurance policy. And I've said for a long time that I think people will pay top dollar to save time and be able to get the attention they need when they want it and when they need it.
Absolutely. Couldn't agree more. And that's the other thing, the subscription model inspired by the DPC docs do. To the extent that we are going to measure time in this profession, we should measure the time we save the customer. That means no more giving them 400-page tax organizers. This is customer abuse. This is absolute customer abuse. We should know everything already in that tax. Plus, by the way, if they could fill that thing out, they wouldn't need us. So we need to save the customer's time, and then we need to measure the time they spend with us. Is it time well spent for them when we have a meeting, when we have a phone call? And then, if you really want to take it to the next level, time well invested. And that's where you get into transformation, because now there's an ROI for them from the time they spend with us, because we're going to guide this transformation. And we can do these transformations over and over. There's always something to work on in their personal life or their business life, right? And we can limit to one transformation per whatever. I mean, you can put caps around it, you can build fences around it. But the bottom line is we should be guiding transformations. We shouldn't be pissing around with scope of work and how many transactions. And every time you add an employee, you have to go to the Department of Paperwork and get a change order. This all needs to go away. It needs to be a frictionless, convenient, time-saving, just like Amazon Prime, because I'll tell you, that's who we're being compared with. Your digital experience in your firm, customers comparing it to what? Prime.
The ease of getting what you want when you want it.
Same day.
Absolutely. Ron, I've been a part of 32 different startups and turnarounds, and I've told people for years that the consistent theme for failure in any one of the turnarounds that I stepped into to fix, the consistent theme was trying to be everything to everybody. And for those startups that we had skyrocket or turnarounds that ended up being great successes, the common theme was we niched. We put a stake in the ground and said, this is who we are. This is what we do. And we do it as good or better than anybody else does it. And it's amazing when you do that, You don't have to be the biggest.
Yep.
Your voice even doesn't have to be the loudest, but since it's screaming in a room where there's not a whole lot of other people talking, your voice tends to be one of the loudest in the room.
Yep, so true. My favorite example is if you look at HP, last time I looked, I think they have about 15,000 SKUs, Hewlett-Packard. When you look at Apple, they have fewer than 75.
Wow.
Kind of says it all.
Yeah.
Apple's incredibly focused. It takes the same amount to power a incandescent light bulb as it does a laser, but a laser can bore a hole through metal because of its intense focus.
Yep.
And we're just not focused enough as we try and be all things to all people because we like the variety. In fact, when you get into public accounting, that's what you say. I like the variety. I like working with a manufacturer and then a doctor. And that's great for your intellectual curiosity. It sucks for your business model.
Yeah. It's going to constantly keep you jumping. We've got a client that is laser focused in the landscape industry.
Yep.
That's all they work with. They work with landscape firms and commercial landscape firms. So they don't even work with residential landscape firms, commercial landscape firms. And we placed a guy with them that runs their client accounting services group, not their advisor group, but their client accounting services group. And one of the first things he did, again, to me, it's just logical. He said, John, I got in here and we had somewhere in the neighborhood of 116 different clients that we're doing monthly, quarterly books for. And we've got 11 different accounting softwares that they're running on.
It's crazy.
Made it very clear within the first 90 days, everybody's converting to QuickBooks Online.
Yep.
And if you don't want to convert to QuickBooks Online, then sorry, we can't support you.
We'll help you find another firm.
Exactly. Yeah. He said, John, I need my people to be able to finish with Joe's landscape company, log out of that system, log back into a system and not have to turn their zero brain off and turn their QuickBooks brain on.
Yeah.
Just stay in that lane.
Could you imagine?
And know what you do.
Could you imagine walking into Starbucks with your own coffee machine? Oh, I want you to use this one to make my latte. Not going to happen. Sorry.
No, absolutely not going to happen. It's one of those things that, again, blinding flash of the obvious that sometimes it takes an outsider to take a look in and go, this is not working.
For sure.
Ron, I can't thank you enough for carving out some time to talk about these topics. And there's so many other things that, I may reach out to you and see if we can set up some time to talk about some other stuff, because there's a lot of things that we touched on and a lot more topics that I'd like to touch on. Your thoughts on private equity that's coming into the industry, what you think about that. Where is this whole movement going in the mergers and acquisitions that are occurring in the industry, about the employee shortage, all of those things that everybody is trying to figure out what are answers to. And I think that some of the things that you've touched on have a piece of an answer to a lot of those problems. If people want to learn more about what you're speaking on, writing about, they can obviously find you on LinkedIn or on your podcast, but give us a little bit more information on those different watering holes where you hang out.
You can find me, I'm on Twitter at Ronald Baker. I'm one of the influencers on LinkedIn, so I do posts up there. There's a lot of content up there. You can email me at ron@verasage.com. Happy to talk to my colleagues anytime. You can also find me at thesoulofenterprise.com, which is the radio show I do with Ed Kless that comes out weekly every Friday. It does drop to podcast, although it is a live radio show on Voice America, not Voice of America, Voice America. And that's probably the best place to find me.
Okay. And VeraSage is VeraSage.
Yeah, it's a combination of veracity and sagacity. That's how it's a portmanteau of those. So, yeah.
Okay. We'll make sure and get all those links in the show notes. And for those of you listening, if you enjoyed what you heard today, hit that subscribe button to ensure you won't miss any future episodes where we spend more time talking about CPA life. Until next time.
We hope you enjoyed today's episode. Be sure to subscribe on your favorite podcasting app, leave a 5-star rating, and visit our website for links and show notes at cpalifepodcast.com. We'll see you next time on CPA Life. ProfessionalProductions.net